Hey guys, what's going on? My name is James Mason. In this video, we are going to talk about RSI, what it is, and how to use it. So, I'm going to get rid of my camera. And the first thing that I'm going to do is, right here, I have my chart open. It's just candlesticks, and the ticker is TSLA, Tulsa. So, I'm going to go up here to Studies. Click on Studies, Edit Studies. I'm going to go over here, and to help you visualize this a little bit more, I'm just going to put 2 EMAs on there. And now I'm going to add RSI. So with just these 2 EMAs, and this again is just to kind of help you visualize this a little bit more instead of just having candlesticks. I'm going to keep that one at 9, and this one right here I'm going to change to 20. Okay. Now, for RSI, these are the settings that you want, but I'm just going to open it up to show you. So, the standard settings, which is what you want to keep it at, and for oversold, keep the line this gold color, and the same for overbought. Again, standard standard that they already have set in there for you. So I'm going to click OK. I did not change anything in that. I want to keep that right there. So if you're adding RSI to your chart, you're just going to get into right here. Come over here, type in RSI, it will add up over here, and then you're going to go to apply, and then now OK. Alright, so what does RSI stand for? It stands for Relative Strength Index. And basically what it demonstrates is momentum. It measures the speed and change of price movements. So this box right here is what RSI is. This is what it looks like. These 2 gold lines that I just previously talked about, these are the thresholds. This one is 70. And when a stock gets above 70, it is considered overbought, and when it drops below 30 right here, it is considered oversold. And as you can see, as this bar for the RSI turns blue, it is actually under that 30 threshold right there. And when it goes above 70, it will turn red. So, as the price of your stock in the RSI starts rising or falling, and once it gets closer to these thresholds or breaks past them, that could, but not always, signal a reversal. As you can see right here, it is actually, and you read the RSI in this box. So right here, it is almost hitting 70. So if you compare the RSI to the price of the stock, and as the RSI drops, you can see the price drops. And then as the RSI goes back up, the price goes up, and then it drops again, and then there we are. The same is true for when it hits that 30 threshold. The price is down here and it's going up, the RSI is going up, and then it finally just gets to a point to where it decides to reverse and go down. So if you're using RSI, it's always best to use other indicators to make them work with each other. And the reason why is if you just solely go off of RSI and it breaks this 70 threshold, and if you always bank that it will drop when it hits or breaks past that 70 threshold for RSI, you can actually find some stocks that have traded and it will go above that 70, and then it will just keep on pushing up through the day. And if you had bought in at some point high to short a stock, and thinking that, okay, it's over 70, this is going to drop back down, I'll cover once it cools off, and then I'll try to go long again. And let's just say that stock pumped out some great news, and these stocks, not all of them, but some stocks have been known, they'll hit over 70, and they can stay over 70 for long periods of time, and it will push that price up very high. And the same is true for if you think that you're just going to buy a massive dip and hit it under 30. So then you would buy right here thinking, okay, I bought the lowest point. It's under 30. This has to go back up. And that is not true. Nothing has to go up, and nothing has to go down. Now, it is easier for the price of a stock to fall than to rise. So let me cut the camera real quick, and I'm going to try to find some stocks that have went over that 70 threshold or below the 30, and give you a visual on what I mean by it can go over that amount or that threshold and continue in that up or downward trend. So as we go back to June 12th, 2008, and look at Telsa. Right here on the 1 minute chart at 10:37, you see that it actually breaks across that threshold of 70. So if you're just solely relying on RSI, thinking, to trade with, and thinking that at this point it goes over 70, it has to take a dip, it has to cool off. Well, look at this picture right here, and this is the 1 minute chart. This is how a stock that is hot can move so quick. And if you bank on it, on a stock taking a good solid dip, and let's just say you try to come in and short this. So say that you almost buy in at the top of the RSI. Heck, we'll actually just say you bought in at the top right here of this RSI at this point. And you were predicting that this was going to go down. So we'll take it to where its lowest point is on the RSI, and there you go. Now, when you're dealing with higher cap stocks, that looks like a lot. That's that's 99 cents. But on a lower cap stock, let's zoom in a little bit more. So we'll go right here and go to the lowest point. If you look at that percentage on how much it had dropped, that is 0.39. So not even a half of a percent. So let me back out. And that's why you solely cannot rely on just using RSI to trade with. As you can see, the price continues to go up. And right here, if you look at this dip, now this is the 1 minute chart again, and just ignore the fact that this is Telsa and the price of the stock, because this does hold true for any stock. Now look at this dip. Again, this is 1 minute chart, so everything here is happening relatively fast. So it dips right here. Let's just say it dips. RSI is 21. Now with the RSI, this can go to, it's measured from 0 to 100. And can you always bank on it hitting a 0 or a 100? No, that's just the range for the scale. So you can see right here, it actually goes down to 21. Let's just say you bought it perfectly at the bottom, and you used it just to go up a little bit. Well, right there, that's percentage wise, that is 0.64%. So just a little over 0.5% that you would have made in that trade. Now, if you hit that perfectly, all right, good. You made a little bit of money. But if you hit this thinking that you bought the bottom of the dip based off of RSI and that you're going to ride it back up to near 70, well, look what can happen. So you buy right here the first time it goes below 30, and it looks good right here because it's going up, and then it just drops. And so if you think at this point, based off RSI, okay, that's just a strong dip in the RSI, it will go back up to 70. Well, at this point, look, you are already minus 1.56%. And if you held on to this more, based off of just trying to trade it with RSI, kind of comes up a little bit, and then it tanks more. And then it tanks more. So at this point, if you were only trading off of RSI, trying to hit it at the perfect number below 30, it doesn't always have to work out that way, or not. It won't always work out that way for you. So at this point right here, if you compare back up here where we had started, hitting that first low RSI and just riding this out with the intention that it's going to get back up to 70 for the RSI. And if you held on to this thing right here, you done lost over 3% of your investment. So this is a quick rundown of RSI, how to use it. And RSI is very beneficial, and if you pair it with other indicators, and if you actually watch some of my trades, I talk about it in some of my trades, how I had used this with other indicators. It it works great. I think it works great, you know, with MACD, and it especially works great if if you've already charted this out and follow EMA lines. So I hope this video gave some of you a little bit more clarification, or I hope that this has just been beneficial in some way for you. If it has, please give this video a like. Please subscribe to my channel, and I appreciate you watching it, and I'll see you in the next one.